For more on the data and the Fed's policy meeting, we want to bring in Dennis Lockhart. He is former Atlanta Fed president and a distinguished professor of international affairs at Georgia Tech. Dennis, what do you think of Steve's analysis on this, the idea that, yeah, the numbers are bad, but a lot of that was pulled forward?
Yeah, I'll associate myself with Steve's analysis there. I think the pull forward effect is probably showing up in the numbers, which means that the committee is likely to just take this as 1 month's numbers, wait some more time and evaluate the next round and perhaps even the round after that before making any conclusion about what the consumer's posture really is.
And that means from the Fed's perspective, they look at numbers like this and they don't panic, thinking that the economy's falling off a cliff yet or that the consumer is losing steam?
There's no reason to panic. The data are mixed in the retail sales numbers, as Steve pointed out, and you can pick and choose among the data to paint one picture or another. So I think this is one to take on board, but I think Steve's theme of the pull forward effect is perhaps the big story here.
So what do you think the Fed's going to be considering? I don't think anybody's really expecting them to cut rates tomorrow, but they're going to be talking today and tomorrow. And what will the discussion around the table be?
Well, certainly the discussion is, is anyone perceiving any true break in the basic narrative they're working off of, which is, as I see it, a slowing of the economy, but no market break from that particular story. And then the question of uncertainty going forward, how they're seeing the outlook given all of the smoke in the air. And I think they'll also be spending some time, no doubt, talking about the framework exercise. So this is a meeting in which I doubt we're going to see coming out of it in the statement or in Powell's press conference any major change in messaging. What's
the framework exercise?
The exercise they're going through around the strategic framework. They've had some meetings around the country, and they should be working toward sometime later this year, I believe, a restatement that takes place every 5 years. And that is something that can take up some time in the meeting.
So uncertainty, we knew was the case already from a lot of the policies concerning trade and tariffs, not knowing exactly how we're negotiating on some of those fronts, although maybe we made some progress with the UK. You have this additional uncertainty from geopolitical events, what's happening in the Middle East right now. How does the Fed try and consider that, or do they?
Certainly, they're paying attention to it. It appears not to have had any particular effect on the domestic economy yet. You had someone on earlier today, Amos Hochstein, who's pointed out that the petroleum markets are well supplied, and therefore, although there was a jump in oil prices, it was modest and seems to have plateaued. So there is just one more factor that feeds into this picture with tariffs, with mass deportations, now with the Middle East, that makes it a very difficult time to project the economy.
And that means what from the Fed's perspective? That they will wait until they have much clearer signals before they do anything?
Yes, I think they're waiting for greater clarity. And they are confident they're in a good position to react to any adverse developments on either side of the mandate. So it's a wait-and-see mode, and I think they're happy with where they are for the time being.
We had an analyst on earlier this morning who suggested that after the Fed puts out its statement tomorrow, the market is going to have to rethink this idea of 3 rate cuts this year, that she didn't think it would be more than 2, and that's not necessarily something the market is prepared for, or that they have really kind of gotten their heads around that. Would you agree with her analysis that, 2 rate cuts at the most this year?
I would agree. I don't think 3 is in the cards.
You think 2 is in the cards?
I think 2 is possible. We've got a lot of time between now and year end and several more meetings. I wouldn't be surprised if the median dot showed 1, but that's just because it takes a relatively few participants to move from 1 to 2 or 2 to 1 in order to change the median. But as I'm looking at this year, I think 2, 1, and I would not entirely rule out that we get through the whole year and there's no rate cut.